So we are done with the planning stage of the audit, in which we did the risk assessment. We identified the audit risk, and we also drive the auditor response to the assessed risk. We have also done the assessment of the client's internal control system, in which we were testing whether the internal control system, which includes the sales system, purchase system, inventory system, non-current asset system, payroll system, bank system, we were evaluating those systems whether they are strong or weak. And this evaluation was done through the test of controls, which is a type of the audit procedure. We have discussed there are two types of the audit procedure mainly. The one which tests the system, which is known as the test of controls, and the one which tests the financial statement figure, which is known as the substantive procedures. So the assessment of the internal control system was the second stage of the audit cycle. The first stage was the planning, in which we did the risk assessment. We took the understanding of the entity, and by taking the understanding of the entity, we assessed the risk of the material misstatement, and we also discussed the auditor's response in relation to the assessed risk. The second stage was the assessment of internal control system, which was based whether the system is strong or weak. If the system is strong, then we did the substantive testing, which was less substantive testing. And if the system was weak, we did the detailed substantive testing. The substantive testing was all about checking the financial statement, the figures, the amounts, the disclosure, the presentation we have discussed, all those things in detail in the substantive procedure lectures. The assertions, the claims made by the management, which involves the cutoff assertion, the classification assertion, the ownership assertion, and so many assertions. And now we will be discussing the review stage. Review stage. Today I'm going to give you the flavor of the review stage. At the review stage, we'll be doing two main tasks. The first one is the going concern testing, and the other one is going to be the subsequent event testing. And the last stage, then it is going to be the last stage afterwards is going to be the audit report. So at the review stage, we are supposed to do two main activities, two main tasks. The first one is the going concern testing, and the second one is the subsequent event testing. So first of all, we'll be getting the flavor regarding the going concern, and then we'll be talking about the subsequent event testing. Remember one thing, that we divided the audit, external audit, between two stages. The first stage was the interim audit. The second stage was the final audit. Like, why we divided the external audit into two stages? Because it was a necessity. If we are going to do all these things within the audit cycle at the year end, then auditor won't be able to complete it on the timely basis. So there will be too much time pressure on the auditor if auditor keeps all these activities at the end of the by the end of the year, or you can say in the final audit section. So hence it is a necessity to divide the audit work, divide the task, audit task, the elements of the audit cycle between two stages. The first one was the interim audit. Now in the interim audit, we do not have the financial statement because that is performed before the year end. So we can do the audit planning, we can do the risk assessment, we can take the detailed understanding of the entity, and we can also assess the internal control system. We can also do some substantive testing, which does not involve directly looking into the financial statements, like, because we do have the ledgers and registers, things like that before the year end. So we can do some substantive testing, not the detailed one. And then there's a final audit, which takes place at and after the year end. Like, for example, you are doing the substantive testing, you are doing the stock take, and now this review thing as well, in which we are supposed to do two main activities. The first one is assessing, the first one is doing the going concern testing, and the second one is related to the subsequent event testing. So the first thing, that is the going concern. Now, you've already studied this going concern thing in your basic accounting papers. What is the going concern concept? It states that an entity is a going concern if it can continue for the foreseeable future. And according to IS1, the foreseeable future is defined as 12 months from the reporting date. 12 months from the reporting date. Like for example, if the year is starting on 1st January 20x1 and it is ending on 31st December 20x1. So from 31st December 20x1 till next 12 months, the entity should be able to continue those 12 months. Then it is going to be called as a company, a going concern company. An entity is a going concern if it can continue for the foreseeable future. Now the thing is why the auditor is concerned regarding the going concern status of the company. Because if the entity is a going concern, then financial statements should be prepared on going concern basis. Going concern basis is the normal accrual basis in which we have the accruals, the prepayments, the carrying values and things like that. And if the entity is not a going concern, then financial statements should be prepared on the breakup basis. Breakup basis means in which there will be the realizable amounts, the amounts which are going to be actually realized on the liquidation of the company. So that is why it is the concern, it is of good concern. It should be a concern of the auditor to see whether the entity is a going concern or not, because if they are a going concern, then fine, financial statement should be prepared on the going concern basis. But if they are not a going concern, then financial statements should be prepared on the breakup basis. So the problem is that if they are not a going concern, they may prepare the financial statement on the going concern basis rather than breakup basis. And the other issues may be, for example, that they are saying they're a going concern, but the auditor does not have the sufficient evidence related to their going concern status. Or the issues may be that the auditor may have their auditor may have doubts regarding their going concern status. Or issues may be that they are a going concern, but there is some material uncertainty related to that, which they have not disclosed. Like for example, currently they are a going concern, but there are some material uncertainty. For example, the government is like taking an action that they will be making all the private sector public in which the entity is operating. In that case, the going concern status of the company will be affected. But right now, the government has not taken that decision. So right now, they are a going concern, but there is a material uncertainty which they should disclose. Now, what if they have not disclosed that thing? What is the impact of that thing on the audit report? So remember one thing, that the going concern is looking at the going concern status of the company, whether they can continue for the foreseeable future. And it is of great concern for the auditor that if the entity is not a going concern, then they should prepare the financial statement on the breakup basis. Similarly, we will be having at the review stage the subsequent event testing. Now, again, this is something which you have already studied in your F3 and the F7 exam, which was IS10 events after the reporting period. These are the events which occurs after the year end, but they may have some connection with the year end. So if the evidence was available at the year end, the standard call these events are the adjusting events, and they should be adjusted within this year financial statements. And if those events does not provide the evidence at the year end, then those events should be called as the non-adjusting events. And those non-adjusting events are not adjusted within the current year financial statements, but they are disclosed if they are material. So we are just getting the flavor of the going concern and subsequent events now. Then we will be going into the detail afterwards. So now, what is the concern of auditor here regarding the subsequent events? The concern is that the auditor needs to gather the evidence whether the events which occurs after the year end, maybe they are adjusting given them and they may not be adjusted within the financial statements, or they are non-adjusting given which should have been disclosed but which are not disclosed within the current year financial statements. So the auditor needs to extend their testing to see these subsequent events. The auditor has a responsibility in relation to the events which occur between the date of financial statements, that which means the year end, and the date of the audit report, because the audit is still there. So then we have done this thing, like in the interim audit, we did the risk assessment thing, we did the internal control evaluation, and we did some substantive testing. And in the final audit, now we'll be doing the review thing, which involves the going concern testing and the subsequent testing. We are already done with the substantive testing.